There are three warning signs in the housing market that most are just not seeing. There's an old technique we can learn from the seasoned investors. We look for the non obvious trade. When there's big news in the market, the masses will crowd around the obvious. It's just human nature. But the smart money looks a little further down the road to consider what others may have missed. So we don't want to talk about the housing market. We want to talk about furniture. It's quite common that when we buy a new house, we fill the new house with furniture. Therefore, we can look to furniture sales as a coincident indicator to the housing market. So the question is, how does this technique work? Well, let's take a walk down memory lane to the red hot markets of 2007. Incomes were up, interest rates were up, construction was surging, and stocks at new all time highs. And all that time, there was little concern about the housing market. The industry looked great, but all was not right. There was trouble on the horizon. While home prices continued to surge, dark clouds surrounded the furniture manufacturers. The S&P 500 started the year 2007 booking in record gains. Nearly all stocks rose with a broad-based market trend, but the furniture industry began to lag. Shown here in black, the S&P 500 in 2007. Compare this to the decline in Bassett Furniture Industries. While the S&P 500 remained in a trading range, Leggett and Platt Incorporated, a manufacturer of home products, in 2007 we saw a precipitous decline in share prices. American Woodwork Corp is no different. To many, this decline might not have been noticeable as it's not one of the more commonly traded stocks, but when comparing this company's shares to the broader index, the divergence becomes apparent. There's, of course, Ethan Allen, a well-known furniture chain, but this too was not able to keep up with the general market. And finally, H&I Corp, one of the largest manufacturers of office furniture. It began its descent far before the others began to decline. Let's consider the actual data. The S&P 500 accomplished fractional gains for the year 2007. During the same period of time, Bassett Furniture down 37%, Leggett and Platt down 30%, American Woodwork Corp down 56, Ethan Allen down 28%, and H&I Corp down 28% as well. So why the emphasis on furniture sales? Furniture is the perfect complementary product that correlates to the housing market, but again, a little less obvious. If we suspect a housing crash, we look to the home builders. But a decline in the housing market will also logically coincide with a decline in demand for the furniture it fills. The furniture and home sales are at the end of the business cycle. Is there any way to predict this beforehand? For this, we look to a leading indicator like construction spending. Currently, we're in the midst of a considerable ramp up in construction spending. The manufacturing sector, in particular, has been the recipient of an impressive amount of construction spending. Here we can compare the various subsectors within construction spending. On a year-over-year basis, manufacturing construction spending is up 32%. In stark contrast, residential construction spending is up only 6% annually. From this point of view, we can see from the beginning of the housing market business cycle, construction spending in the residential sector is now lagging. There's something else seasoned investors look for. Things that stand out. When most stocks and sectors are rising, we should make note of what's not going up. It shows us something is wrong. Well, now we're going to show you some really good news and we're going to show you what's wrong with this picture. Also reported the manufacturing PMI, and this news was good. Readings above 50% indicate growth or expansion in the manufacturing sector. In fact, economic activity in the manufacturing sector expanded in March after contracting for 16 consecutive months. The real data, however, is in the fine print. What's really impressive is within the PMI report, we see growth in nearly every subsector, but not all the news is so good. Within the manufacturing PMI, consider new orders. In this case, we see growth in 12 sectors. Of the only two industries that reported a decline, this includes furniture and related products. 13 industries reported gains in production. Only two marked declines, again, one of which is furniture. Of the 18 manufacturing sectors, 7 saw improvements. Of the 8 that worsened, this included furniture. Inventories improved in most cases, with the exception of a small list which includes furniture. Prices in 11 industries increased under a greater degree of demand. Unfortunately, this did not include furniture. 7 industries reported increases in manufacturing imports. Only 2 industries reported declines, one of which was comprised of furniture. In fact, despite a widespread growth in the manufacturing PMI report, the furniture sector failed to participate in nearly any of the growth. This really helps now put the furniture manufacturers and their declining charts in perspective. Well, this chart was from 2007. This now begs a question. What do the charts look like now? While some of the names we discussed are still performing quite well, along with the overall uptrend in a broad-based rally, other names such as Bassett Furniture is now beginning to waver, as is Leggett and Platt. It's also diverging from the crowd. Our discussion of specific stocks is not meant to serve as a recommendation, but rather to demonstrate an important principle, the principle of reading between the lines. Consider the less obvious data. What can we learn from all this? What is a takeaway? Construction spending is strong, especially in manufacturing, and that is certainly welcome news. But the spending is not finding its way to the residential sector. More good news for manufacturing in the PMI report, but nearly every measure shows furniture manufacturers are declining. We're in the midst of a broad-based market rally, but some of the furniture manufacturers are being left out of the party. There's no limit to the data we may harvest or the conclusions that we may draw. Every market price, every economic report, and business trend provides us with another piece to the puzzle. Our goal, our mission, our passion. Piece together the data, deconstruct the economy, construct our theory, put our hypothesis to work, test the theory, and commit ourselves to the endless wonder of economics.